Hey everyone, and welcome back to the channel. Today, we're diving into a topic that could save your family millions of dollars. Did you know that married couples can protect nearly $26 million from estate taxes? It sounds incredible, but it's true, and I am going to show you the two biggest strategies to do it in the next few minutes. So, grab a coffee, and let's get started. First, let's talk about why this is so important. For 2024, the federal estate tax exemption is a whopping $13.61 million per person. This means you can leave up to that amount to your heirs without paying a single dime in federal estate tax. For married couples, you can effectively double that to over $27 million, but only with the right planning. Without it, the surviving spouse and your children could be hit with a massive tax bill, potentially forcing them to sell assets like the family home or business just to pay the IRS. That's a nightmare scenario we all want to avoid. So, how do we make sure your family is protected? Let's break down the two primary strategies. The first one is what I call the split estate or portability strategy. It's the simpler of the two and has become incredibly popular. The concept is straightforward. When the first spouse passes away, any unused portion of their estate tax exemption can be ported or transferred to the surviving spouse. Let's use an example to make this clear. Imagine a couple, John and Jane. The exemption is $13.61 million. John passes away, and his estate uses $3 million of his exemption to leave assets to his children from a previous marriage. He has $10.61 million of his exemption left over. By electing portability, that unused $10.61 million is added to Jane's own $13.61 million exemption. Now, Jane has a combined exemption of $24.22 million that she can use to protect assets for their heirs. The key step here is procedural. The executor of the deceased spouse's estate must file a federal estate tax return, Form 706, even if no tax is due. This form must be filed within 9 months of the date of death, although extensions are available. On that form, you must explicitly check the box to make the portability election. If you miss this step, that unused exemption is lost forever. It's a simple checkbox, but it has multi-million-dollar consequences. So, it's crucial to work with a professional who knows the process inside and out. This portability strategy is fantastic for its simplicity and flexibility. It allows the surviving spouse to have full control over all the combined assets during their lifetime. However, it's not always the perfect solution, especially for high net worth families or those with complex family dynamics, like children from different marriages. This brings us to our second, more robust approach, the joint estate or billionaire strategy. This is often implemented using what's known as an of trust, which involves a marital trust and a bypass trust. This strategy is a bit more complex, but it offers more control and certainty. Here's how it works. The couple creates a joint revocable trust while both are alive. The trust document contains specific instructions on how to divide the assets upon the death of the first spouse. When the first spouse dies, the trust splits into two separate subtrusts. The trust, or marital trust, holds the surviving spouse's share of the assets and is often designed to qualify for the unlimited marital deduction, meaning no estate tax is due at that time. The B trust, or bypass trust, is the crucial part. It gets funded with assets up to the value of the deceased spouse's available estate tax exemption, that $13.61 million. This bypass trust becomes irrevocable. The surviving spouse typically receives all the income generated by the assets in the bypass trust for the rest of their life. They may also be able to access the principal for health, education, maintenance, and support. But here's the magic. Because the surviving spouse doesn't have full control over the principal, the assets inside the bypass trust are not considered part of their estate when they pass away. They bypass the survivor's estate and go directly to the named heirs, completely free of estate tax. This strategy effectively locks in the first spouse's exemption, protecting it from future tax law changes and ensuring it benefits the children or other heirs as intended. The assets in the bypass trust can also grow in value over time, and all that growth is also sheltered from estate tax. The of trust is particularly useful for blended families, as it ensures that the children from the first spouse to die will eventually receive their inheritance. It also protects the assets from the surviving spouse's potential future creditors or even a new spouse. So, Let's put this into a practical checklist for you. First, review your current wills and trusts. Do they mention portability, or are they structured as an of trust? If you're not sure, it's time to find out. Second, remember to check your state's estate tax rules. About a dozen states have their own estate or inheritance tax, often with much lower exemptions than the federal level, so you need to plan for that as well. Third, if your combined assets are approaching or exceed $5 million, it's highly recommended that you meet with an experienced estate planning attorney. They can help you decide whether portability or an of trust is the right fit for your family's unique situation and draft the necessary documents. Finally, don't forget about the annual gift tax exclusion. In 2024, you can give up to $18,000 to as many individuals as you like without filing a gift tax return or using up any of your lifetime exemption. Over many years, this can be a powerful tool to reduce the size of your taxable estate while helping your loved ones now. Let's do a quick recap. The split estate or portability strategy is simpler. You file Form 706 after the first death and elect to transfer the unused exemption to the survivor. The joint estate or of trust strategy is more structured. You create a trust that splits at the first death, locking the deceased's exemption into a bypass trust to protect it for your heirs. Both are powerful tools for preserving your family's wealth. Choosing the right strategy depends on your net worth, your family structure, and your long-term goals. There's no one-size-fits-all answer. The most important step is to be proactive. Don't leave this to chance. Start the conversation with your spouse and a qualified professional today. If you found this breakdown useful and it cleared things up for you, do me a huge favor and smash that like button. It really helps the channel reach more people. And of course, subscribe and hit the notification bell so you don't miss our future videos on wealth protection and financial planning. I'd love to hear from you in the comments. Which strategy are you currently using, or which one are you considering? Let's get a conversation going. Thanks for watching, and I'll see you in the next video.